I want to go back just a minute, something that I failed to mention that I want to talk about for just a minute. We talked about the situations in which a county might have a shortfall, and there wasn't going to be sufficient title ad valorem tax to make a distribution. And this is a little bit of a plea, I guess, to the tax commissioners. If you find yourself in a situation where you're not going to be able to true up the ad valorem tax and have additional money to distribute to title ad valorem tax, pick up the telephone and call the county and the schools and the cities and say, just a heads up, I don't have any other money to send you until the next month's ad valorem tax starts coming in. Just so they're not surprised and that everybody's kind of on the same page. There's several times in this process I'm going to talk about how important it is for you guys to communicate with each other. Because if you don't, somebody's likely to get their feelings hurt or make some statements that you probably prefer not be made. So that's just sort of a heads up. If you find yourself where there's no money to send out, give folks a friendly nod and say, hey, just to let you know, we didn't take in that much. One of the tax commissioners said, well, how will they ever know if we did it right or not? This was at one of the earlier training sessions, and I thought, well, I don't know about you, but that's not a chance I think I'd be willing to take. You know, just give them a friendly hello to say, you know, won't be anything else coming from this month, but hopefully we'll get it made up in a few months. All right, so we've talked about sales tax, and I'll correct one thing I said as I get into it deeper. But we're going to distribute now that first third of the pie. I told you the first third of the pie goes where? Always. Goes. Y'all are a very good class. All right, so if the county has no independent school system, 100% of that money goes to the county school system. In the case of, for example, I'll pick on Cobb County here. Cobb County has a county school system, but the city of Marietta has an independent school system. So Cobb County falls into the second group on my chart up here, and they have to distribute the money based on the ratio of students in the two school systems. And that's typically done on full-time student enrollment. Was in one of the training sessions last week, and I had the county, a county was there, and these two folks came up to me, I think it was on break or at the end of the morning session, and said, we already know how it's going to be done. And it was the county school system and the city school system. They said, we've agreed, and we're going to tell the tax commissioner that we would like this third distributed on our student enrollment as of October 2012. So again, this is a situation, though, if you are the tax commissioner and you're in a situation where you need to know what those numbers are, I suggest you go to the school systems and say, we need to sit down, we need to talk about this, and we need to know that you both agree with this distribution. Better you get that up front than have them come at you 6 or 8 months down the road and say, you're not paying me right. I also suggest you get them to sign something that says, I agree that this is how we're going to distribute the money. Because they might forget y'all had that conversation. Now, the first third is fairly easy, because we know where it goes, and it may go, in case of DeKalb County, for example, they have DeKalb County schools, Decatur schools, and City of Atlanta schools that they're going to have to distribute. Jackson County has Jackson County schools, Commerce City schools, and Jefferson City schools. But most of you in this room are sitting in a county with only one school system. So that's a pretty easy thing to do. But let's get deeper into it. Now we're at our second third. And I told you almost always this is going to go to the county. So let's start with the easiest one, and the county has local option sales tax. The county has local option sales tax. This third of the pie will be distributed the same way local option sales tax is distributed. That means if local option sales tax, 50% goes to the county and 25% to county A and city A and 25% to city B, that's how you're going to divide this piece of the pie. Again, that's a recorded document, but I also urge you to have that conversation with the county and the city and say, this is a certificate, this is how I'm going to distribute the money. Now, I had a county, unnamed county, in another training session that said, can I just send it all to the county? Well, first of all, the statute doesn't provide for him to do that. And the only way I think that would even be feasible would be if everybody agreed to it. Now, they can't agree to how much percentage they want. You think they're going to agree to let that whole check go to the county? I doubt it, but he's welcome to try. But it would have to be with some sort of signed agreement that he could just give that one check to the county. Because the statute says he's going to distribute to each authority based on that distribution certificate. Now, if that distribution changes because the judge issues an order and says it's going to change because they're in baseball arbitration, or some of the counties in this new negotiation they've done on local option sales tax have set a rate for 1 year and it may change periodically. You can change this as you need to change it. And once you make the change and how that distribution is going to be, it will affect the next time you make that distribution. So you have to be sure that you change it at the appropriate time. Now, if the county doesn't have lost, there are a few counties in the state that don't have local option sales tax. There's Cobb County's in the room, Gwinnett County doesn't have it, Cherokee County doesn't have it. I'm sure there are a few others, they're not coming to my mind right now. So these counties don't have a loss, so there's nothing recorded. They don't collect local option sales tax now. So they're going to distribute this third of the pie based on population of the county and the qualified municipalities. Now this is, again, I'll preach the same sermon. Make sure everybody's in agreement with how you're going to do this. I would want to be the responsible party for figuring out those population variances. I would want to have some buy-in from everybody involved. Now, we talked about those 8 counties earlier that actually have local option sales taxes dedicated to the school system. If you're one of those 8 counties, then this third of the pie goes to the school system. Now, that was Bullock, Chattooga, Colquitt, Habersham, Houston, Rabun, Towns, and Mitchell. Okay, so if I didn't just call your name, you can ignore me on this particular point. Now, if the county has host, which we talked about are only 2 counties, then the money is going to be distributed to the county authority and the qualified municipality or municipalities according to a code section that deals with how host tax is handled. So for those 2 counties, it's going to go to the locals governments, but it's going to go based on their, so for almost everybody in this room except Mark, and I don't know if I had anybody in those other counties, those 8 counties, you're going to either use what's in number 1, which is that distribution certificate for local option sales tax, or you're going to have to go to the population. So that's easy peasy, right? Now this is one of those things you as the county are going to have to input into tables and gratis. We will not do this for you. We built you the tables, but you have to be the one to go into those maintenance tables and put in how this distribution, where it's going and who it's going to, and what the percentages are. Now, this one gets a little bit more complicated. If the county has SPLOST, Special Purpose Local Option Sales Tax, then the money is distributed to the county governing authority and each qualified municipality according to the intergovernmental agreement. The department doesn't know what this intergovernmental agreement is. So this is one of those cases you have to talk to those officials. And you have to say, what does that intergovernmental agreement do, and how does that mean I need to distribute this money? You don't have to like them. Y'all can pass each other on the street, and you can not make eye contact so you don't have to speak. I don't really care. But for once, you all need to come together and decide this is what that intergovernmental agreement says, and this is how the money's going to be distributed. What happens now with special purpose local option sales tax is it is a county tax, so when we distribute that money from the department that comes in monthly through sales tax, we send that whole check to the county governing authority, and they're divvying it out. So we don't know. I can't help you with this. I can't give you any information on this. And guys, there's all kinds of agreements out there. There's no two alike. And I've been finding out over the last few days that even though there are agreements in place, folks aren't living by them, which I think is extremely interesting. In one case, the county's keeping it all until certain debts are paid off. And only then are they going to share it with the cities, but that's not what the intergovernmental agreement says. In another case, they've gone ahead and given the cities what their portion, and now the county's keeping it all. And they say, what do we do? And I said, it says you're going to do it by the intergovernmental agreement. So I suggest you make sure that they're okay with you keeping it all if that's where you are. But again, you need to get that, and you need to have something in your file, you, the tax commissioner, that gives you some coverage that you're doing it and everybody agrees with how you're doing it. Now, this gets even more complicated if the county had a SPLOST, but it's ended. Maybe that SPLOST ended because these things end typically at the end of a quarter, and it's been less than 12 months and you haven't voted in a new one. So for up to 12 months, you're going to distribute based on whatever the intergovernmental agreement was when the SPLOST was in effect. Now, you as tax commissioners don't have a clue what that is. So you're going to have to go ask somebody what that is. Now, if the SPLOST has been expired over 12 months, then you're going to have to revert to the formula we used for the second third and either use the loss certificate formula or use population, whichever one of those you fall into. I said it just got worse. I didn't promise y'all it was going to be fun. All right? So this is something that, you know, the people who know this are your finance folks in the county normally. They're the ones tracking these dollars. Now, for those finance folks in the room and for some of the school finance folks in the room, this money is coming in no longer earmarked as SPLOST money. So it's no longer earmarked to be used for those special projects. Good, bad? It's can be put in your general fund, or it can be put into those projects, but it's not earmarked. And this is really conversation for those city and county finance or in school finance folks. Because in the school's money, the school SPLOST is never part of this distribution formula, so their SPLOST certainly will be affected some by the fact that there's no sales tax collected on motor vehicles. So all the money they're getting is going to come through their title ad valorem tax, and it's no longer earmarked for specifically SPLOST. Now, it can be moved into those projects, but it doesn't have to be. So that's a little bit of a budgetary issue that they need to work through. All right. Again, if you don't hear anything else I say today, you got to talk to the local folks. You've got to have those conversations to make sure this is done. Now, if the county does not have SPLOST but has a MARTA tax, and Clint corrected me, I thought it was just Fulton, but it's both Fulton and DeKalb, then the final third is going to go to MARTA because neither of those counties have a county SPLOST. And if the county never had a SPLOST, and I guess there are a few out there who've never had one, then it's going to be either done on the loss certificate or you'll have to revert to population, whichever one of those is applicable. Have I confused you totally? That was my mission. I just want to make sure I've done it, okay?
Is the population going to be based on the last census?
Yes, it would be based on the last census. And again, that's why I urge you to probably have some conversation that everybody agrees what that number is. Okay? Any other questions on this part? Because we're going to move on to something even more fun. Yes, sir.
All of this discussion now, how to split this money up, tax commission, this is only the money that's left over after you drew it up.
Yes, sir.
So it's not a lot of money.
Well, not initially.
Could be enacted.
Okay. His question was, all this discussion on how we're going to split up probably isn't a lot of money, or it could be we're not splitting up anything because there isn't any. That's true, at least perhaps initially, until people start those 1.7 million vehicle transfers that go on in Georgia almost every year begin to get recorded, and folks are walking into those tag offices paying. We here in Georgia like our vehicles. And there's a lot of transfer of motor vehicles that goes on. Again, the underlying hypothesis and theory is that there's going to be those transactions, those new transfers, that are going to continue to bring money into the title ad valorem tax world. Again, that's what's the underlying theory behind this bill. And we're getting money, we're getting at least more money up front from a group of taxpayers that we've not been getting money from before, which is our casual sale folks. So that's one of those revenue places in the bill that is supposed to bring on additional revenue, is that on those casual sales you might get $100 or a couple of $100 a year in ad valorem tax, and now you're getting more money up front. I guess part of the hypothesis under this bill is there's some time value to money in my pocket now as opposed to money I may get down the road. Okay? And again, it's going to take time to make this, to see what happens here. Jennifer? It always goes back to 12. Which should be the same as 13 if you've trued up 13 to 12. I mean, should be equal. Now, there may be a rare occasion, and it would be rare, where your actual current month collection was more than prior year, same month collection. The only thing that would typically cause that would be a fairly substantial increase in millage rate. If that's the case, we're not going to pull away from that old ad valorem tax. But again, you're truing up to 2012 normally. So that kind of handles the money. We've gotten it in and we've gotten it out, right? We hope. So let's talk about another thing that's probably going to happen in our new world. Under current law, a vehicle value, even used for ad valorem tax, is appealable. Most people neither know nor care what that value is. What do they typically care about? It's too much money. And so in order to file the appeal, they will use value. But counties, as a rule, deal with very few of these a year. When I was in the county many, many years ago, we might handle 3 or 4 a year, and that was all the motor vehicle appeals we had. And I tell you honestly, it was generally the same person over and over again. And then sometimes it would be their friend, because, you know, you call a friend and before you know it, you got a whole little group of folks. But we generally only dealt with a few folks. And you would just hope between years that maybe they would sell that car and you wouldn't have to deal with them again. Now, there's 2 ways someone can file the appeal. The first is to file an affidavit of illegality that just plain says it's illegal to tax me. they have to file a bond, and then they can take that appeal straight to Superior Court. That is not likely to happen because the cost of the bond is probably going to be more than what you're charging them in tax. But it's there, and it's their right if they want to use that. But most taxpayers who are going to file the appeal are going to do it under 485311. 485311 isn't pretty when you're dealing with real and personal appeals. It's just plain ugly when you're dealing with motor vehicle appeals. The timeline doesn't work well, and we'll talk about some of that as we move forward. But under that process, taxpayer files the appeal with the Board of Tax Assessors. Taxpayer has the right, if they don't reach an agreement at that level, to go on to the Board of Equalization and Superior Court if they want to. And even by a little quirk in the law, they could go to binding arbitration on this. Now, I think that's not likely because of the cost of binding arbitration, but there's nothing that would prohibit them from filing an appeal on this into binding arbitration. So the appeals process is going to work a little bit like this. Taxpayer is going to come into the office, and again, let's go back to my casual sale fellow. Now, this probably isn't going to happen at the dealer sale, because again, all I care about is, can I afford to make that monthly note? And if I can't, I'm going to walk away from the whole deal, and it's not the amount of title tax that's going to be the breaker. It's going to be the casual sale fellow, probably. So, back to my fellow that when we told him he owed $2,275, he passed out. And now we've got him standing back up at our counter, and he's like, oh, I got to do something. This isn't right. Well, taxpayer has to file an appeal in order for anything to happen other than him paying 100% of the title tax due to receive his credentials. So he either has to show the tax commissioner that he's filed the bond or that he's filed an appeal with the Board of Tax Assessors. At which time the tax commissioner can then flag in gratis that this is an appeal. So this is a new process you have in gratis that will allow you to turn on a flag that says this taxpayer has appealed. At which time gratis then performs a calculation to reduce the amount due to 85% of what would be due. Because that same provision that exists today for real and personal property appeals, that the taxpayer is allowed to pay at 85%, applies in the motor vehicle world as much as we would like to see that changed. Now, once the appeal is resolved, and here's my sermon to tax assessors, work these things through the process as quickly as you can. Because a piece of real estate is still going to be there if it takes you a year or 6 months to work the appeal. A vehicle may very likely be gone somewhere. Taxpayer still owes the county maybe something. So once the appeal's resolved, we then have to recalculate based on whatever value has been reached between the taxpayer and the tax assessors. And we either need to refund the taxpayer if he's overpaid, and if we refund him, we owe him interest back to the date he paid. That's why I'm urging the tax assessors to work these things through. And then if they owe, and they're going to owe interest on the additional amount. And in some cases, we're talking about not a lot of money, but they still owe it. In the back, Barbara?
Once the appeals are settled and we give it
30 days. They have 30 days to pay you whatever they owe you. See?
Have a taxpayer appeal a motor vehicle valuation and we accept it taken care of. Let's say we choose to change the value. We need to get onto this in a second. What's my method of notifying them of the change that I've made? I say I've changed it from 10,000 to 5,000. How do I?
You notifying the taxpayer or the tax commissioner? All right, well, I'll show you. Sort of. All right, one of the things we've done, I'm sorry, Linda. Yes, ma'am?
do we have to have, they have to go file the appeal and bring it back to us before we can charge them the 85%? Or we just do the 85% and then send them over to the assessor?
Do you trust all your taxpayers? I would suggest that and we're going to talk about maybe some ways to make this a little easier on the taxpayer, but I think you need that appeal document in your hand so that you know the appeal has been filed before you change gratis, mark it an appeal, and allow the taxpayer to pay at 85%. I'm going to talk about, as part of what we're going to talk about in a few minutes, maybe how we want to maybe amend the process a little bit for specifically motor vehicle appeals and why. One of the things we are doing is designing an appeal form for motor vehicles because, again, that just doesn't fit what we've designed for real and personal property. So we've designed a new form. This form will exist in the WinGap system. It'll also be an online form. It will not be in gratis, at least on March 1st. Just will not exist there. Because under statute, the appeal has to be filed with the Board of Tax Assessors, right? Not with the Tax Commissioner's Office. So this is just kind of a mock-up of what the new appeal form looks like. This is just an outline of how the appeal process works. And again, they have the right to go to arbitration, even though it just doesn't fit this world very well. You have to know it's an appeal in order, yes ma'am? Gratis is great at calculating money the taxpayer owes us, and it can do penalties and interest. It's not so good at calculating money we may need to pay out. So we are going to give you kind of a standalone program to be able to calculate that interest. Okay? It just doesn't fit in the gratis world very well.
But if they owe us, gratis will figure that out?
Yeah. Because you're going to know what they paid and then what additional is owed. Okay. Again, they're appealing the value in the motor vehicle assessment manual. Now, tax commissioners and staff, you can probably help yourself a little bit. If the fellow wants in with his title application and he happens to have his bill of sale, and you look at the bill of sale and he paid, as an example we're going to use in a minute, $4,000 for that vehicle, and you pull that vehicle up in gratis and it says the value is $6,600, and you look at him and say, gosh, you got a great deal on this car. It's valued $2,000. You paid $2,000 less than what our value is for it. You've just invited him to file an appeal, haven't you? So just tell him what he owes. Then if he says, how'd you come up with that? Then in full disclosure, you're going to need to tell him. But again, that's what they're going to be. Number one, they're probably more going to be appealing that it's too high. Because we all know that's what they really mean. But anyway, you can probably maybe help yourself a little bit by not setting yourself up for it to start with. But we are saying that a copy of the appeal needs to be given to the tax commissioner before you turn on that flag that says it's an appeal, and gratis allows you to collect 85%. And you're going to issue that taxpayer his credentials so he can go drive legally. Now, it will be up to you if you want to put a hold on that title at that point so that you have some leverage to collect that other 15%. But that'll be a county by county decision. Now, this is where I was heading with that conversation, Linda. Do you want to talk about maybe allowing the tax commissioner to accept an appeal on behalf of the Board of Tax Assessors while that taxpayer is standing in their office? In many counties, and I don't know about in this room, but the county tax commissioner office or the tag office is nowhere, not even in the same zip code with the county tax assessor's office. So now you've got a taxpayer who's understandably aggravated because you've just told him he owes several $100s he wasn't prepared to pay. And now you're saying, and I understand that you're unhappy, Mr. So-and-so, but before I can do anything other than collect the full amount from you, you need to go to the tax assessors and file an appeal. Now, it may be a day like last Monday and Tuesday and Wednesday when it was raining cats and dogs. And you're going to send this poor fella a couple of blocks, or has to get in his car and drive to another office to get to the tax assessor's office to file the appeal. Now, tax assessors, I love y'all, and I was one of y'all. But sometimes y'all irritate folks. So now you've got a taxpayer who's already mad at the tax commissioner's office, and he's going to walk into your office and he's going to get that one clerk in your office that's had a bad day, who pops off and says something like, well, gee, I don't know what you're upset about. I wish I could afford a car that nice, or something like that. So now you've got this taxpayer who's twice mad, and he's going to fill out the appeal, and they're going to give him a copy, and now he's going back to the tax commissioner's office to pay the money. So what we have done is run the taxpayer and irritated him beyond words. And this is the point of the presentation. I usually say, do you think you might need a little more security in your office than what you have now? Because you're dealing with people who are maybe pretty riled up. Tax assessors, I'm not picking on y'all, but I'm just trying to kind of show. Now, this process maybe doesn't work well, because typically when I handled appeal, when I was in the county, they would call me from the tax commissioner's office and say, we have Mr. So-and-so up here, and he wants to file an appeal. Now, in the ad valorem world, what day did they file an appeal? On their birthday, right? Because that's the day they came in to pay. If the taxpayer had the vehicle there, if I had someone in my office, or we had film in the old Polaroid camera, because that's how long ago I'm talking about, we would go down, take pictures of the vehicle if it was damaged, record the odometer reading, get the information that we might need to resolve the appeal. So if the tax commissioner is going to let them just file the appeal, the tax assessors, if they're not in the same facility, may lose that opportunity. I wouldn't change the value on a house or a vehicle that I hadn't at least been out to look at. So I wouldn't just, are you just going to take the taxpayer's word that it's all beat up? We already established that some of them don't tell the whole truth, right? So you'd want to have that opportunity. This is maybe a conversation y'all need to have between, if y'all are in the same building, it'll probably work. But I know some of you have satellite offices, so you may be miles away from where the tax assessors are. So do you want to work out something so the taxpayer isn't any more inconvenienced? Again, that's just a suggestion. Now, this is where it gets even trickier, and why it's difficult to fit the appeal process into current statute. There is no assessment notice, and today in real and personal property, taxpayer receives an assessment notice annually, and they have 45 days from the date of the assessment notice to file an appeal. They don't get an assessment notice on this new TAVT. They don't know what they owe till they walk into your office, right? So we wrote a rule and reg, and guys, we wrote it, we put them out there, we received not one comment, so guess what? These are for real. This is what the regs say. The time allowed for the filing of a written appeal shall be 45 days from the deadline date for the payment of the tax. I have 3 scenarios here where the deadline for the payment of the tax is different. In a casual sale, they have 30 days from the date of sale or the date of purchase to pay the tax. So you have that 30 days, even though they may pay it earlier, the deadline to pay was 30 days, right? So you have 30 days plus 45. Tax assessors, that's going to be fun to track. In the dealer world, under current statute, they have 10 days to file the application for title and pay the title ad valorem tax. So they have the 10 days plus 45 days. In the case of a newcomer or new resident of Georgia, they have 30 days from the date they establish residency to pay the title ad valorem tax. So they have 30 days plus 45 days. Again, this just doesn't fit well in today's, in the appeal statute. Yes, Roy?
Do you consider to be valid representation for date of residency?
What do I consider to be validation of a date of residency? I'm going to throw this one back on the tax commissioners. What do you use now to determine date of residency? driver's license. Some cases it may be a lease, some cases it may be a utility bill, in some cases it's whatever day they come in and tell you that they are a resident of Georgia. I've had as many answers to that as I've done presentations and people in the room during those presentations. So, yes, ma'am.
If they purchase the vehicle from an individual, are they required to submit a bill of sale to prove what they paid for it?
All right, her question is, if they buy from an individual, are they required to provide the bill of sale to show what they paid? No, not necessarily. Now, if they paid less than the value, they would probably want to show you that bill of sale. But to come in and do the title transaction, they're not necessarily required to provide the bill of sale.
How do you know what they paid? How do you know what to?
Well, you don't, Gratis is going to tell you what the value is for you to charge on that vehicle. Okay?
So it's whatever they paid.
So what they paid is not necessarily relevant to what they're going to pay, but it may be relevant to why they want to file the appeal. Because I'm fixing to show you an example of, well, not quite there yet. Steve, this will be a 30-day notice on a vehicle. It's still under construction, but we are working on where this would be what you use to tell the taxpayer what that value would be. So it's still a work in progress. Cindy?
Vicki, is it a true statement that you have a taxpayer come into your office, say moving in from out of state, or let's use a casual sale. They come in, they pay that full amount of money. They get home and they say, you know, I think that value's too high. It's still an appealable value,
Yes.
correct? Even if it's paid.
Yes. Now, I wouldn't go back and refund them 15% unless they made me do it. I wouldn't offer that because they've already paid. And I'm not even sure Gratis could handle that, so I'd have to find that out for you. But because of the way that regulation is written, I can pay it on day 30. And then I can go home and talk to somebody and figure out that I really probably, that was higher than what I paid, and go back and say, I think I want to file the appeal. Now, how do we let them know about their appeal rights? This is another kind of tricky thing because there's no notice of assessment. Steve?
I'd like to hear what you have to say about that, because I guess there's a lot of...
I just made that up. I'd never said that before.
There's a lot of public relations, I guess we all need to do, in reference to that, with someone with other, folks. But on the appeal form, I'm real excited to see that, so it can be standardized. But would there be any reason, and this may already be on there, to have a place to put the type of sale that has occurred, whether it's a casual sale, like a checkbox, or date of residency, if it applies, or something like that? I don't know if I'm making sense or not.
You are making sense, and I have to confess that that's one of the things they've worked on back at the office that I haven't looked at very closely. So I can't tell you whether it's there or not, but we can look at that. All right, there are various reasons a taxpayer might appeal, and these are some of the reasons they appeal in the ad valorem world now. They say, my car has more miles. It's not worth what, because again, going back to when I told you earlier this morning how we determine our values, that it's the blend of wholesale, retail, we're also using the average condition car. So we're assuming average condition for that age. So you have this issue here where you could have extremely high mileage. You could have a storm damaged vehicle. You could have a rebuilt, assembled, these kind of cars. These may be ones that taxpayers are going to want, that would appeal. Now, I've been in the tax assessment business since 1984. I've probably taken every class at some point that the Department of Revenue offers in tax assessment and appraisal. I can tell you as I stand here, I have never taken a class on how to appraise an automobile. I can also tell you as I stand here that I don't think that you will see one coming necessarily out of the tax assessment field, because that's just simply not an expertise that we currently have. So you're going to have to look elsewhere for some sources to help you work through this. Had a lady yesterday talk about, she said, I have a taxpayer that's getting ready to appeal a bunch of stuff, and I need to get pictures and stuff because I need to work up my comps. And I stood there for just a minute and I looked at her and I said, if you don't mind, may I ask you a question? And she said, well, sure. I said, where are you going to find comps? And she sat there for a minute. She said, I really don't know. I said, okay, I just wondered if you knew something that I didn't know. But she was trying to work it up like we would a normal appeal where you pull comps of comparable property. And this was trailers, like the big trailers behind the semis, those type trailers. I'm like, I don't know where you get comps for something like that. But let's take our example here of a casual sale. This casual sale fella in the future in May of 2013 is going to buy this Toyota Camry for $44,000. Now, this is one of those cases you don't want to greet the taxpayer at your counter and say, wow, you got a great deal because I think that car's worth $6,125. So he's going to appeal, and one of his reasons may be that this vehicle has high mileage. Now, we also know that typically vehicles bought between individuals may have a lower value than dealer sales, right? So maybe you can see through that and see who might be some of the folks who pushed this bill. Might have been the dealer world, trying to kind of level that playing field a little bit. Now, if you go out to Kelley Blue Book, you're going to find some information. Now, there are all sorts of vehicle pricing guides out there. Told you that the department has said for those values that aren't in our manual, we're saying NADA is the source. Now, there's nothing wrong with the tax commissioner and the tax assessor sharing a subscription to NADA. Also remember that the department's values are locked in as to what date. January the 1st, right? Just like everything else in the ad valorem world, it's January the 1st. NADA is one source that will allow you to kind of lock things down. Some of these other sources will change as time moves through the year. But Kelley Blue Book is one that tax assessors may want to look at. And it's saying that this Camry with this number of miles on it and a private party sale would go for about $4,540. Now that's still more than this guy's bill of sale says he paid for it. It says he paid for. Now you're the tax assessors. What are you going to do? Are you going to say $4,000 is close enough for government work? Or are you going to say, I have a pricing guide here that says it's worth $4,540? That's a decision for the Board of Tax Assessors to make. There are some other guides out there. Edmunds has one. And in this case, Edmunds says the private party sale is around $3,800. So would you agree with his $4,000 purchase price? Maybe you would. So there's some other sources out there, and a lot of that to say tax assessors have to figure out how to walk through this. Have to figure out how to move these through quickly. And if tax assessors don't know how to value these, think about the Board of Equalization, because they know even less about valuing vehicles. Steve?
When I change the value for a particular tax year, and then is there anything or preventative measures that will help to keep that motor vehicle's value from going back up the following year or in a subsequent year or something like that?
If they're in the ad valorem world, there is a code that the tax commissioner can use that will lock that value in at whatever you set and will allow it to depreciate moving forward at whatever the rate of depreciation is. Now, the tax commissioner has to set that. However, in the title ad valorem tax world, just because I as the taxpayer appeal that value doesn't hang there. So if that vehicle moves to the next owner, they're back to square one on an appeal. Right. Right. But in the old ad valorem world, they can lock in that value. Now, there are tax commissioners, and I had one years ago who wouldn't do that. So that's why I had the same taxpayers coming in every year on the same vehicle, because they wouldn't lock that in. And maybe it wasn't an option back then, but it is now that they can do that. So who's going to appeal? The casual sale folks, I think we can probably count on some of those. The newcomer to Georgia, and we're going to talk about what happens to those newcomers, and you'll see why they might want to file an appeal. Those sales where the purchase price is less than the value. And guys, taxpayers are a whole lot smarter than they used to be, and sometimes they're smarter than we are. And they'll go out and look at that value.
Can they appeal on that basis?
Sure.
That if this is, okay, so it doesn't have to be that there's excess mileage or some, the value of the vehicle is, they can just say, it's too much.
Absolutely. Now, the other thing I fear that's going to happen here is that a taxpayer buys a new car, and he realizes that our value is significantly higher than what he paid for it, and he says, well, if you're wrong on that one, you're probably wrong on these other 4 I own. And so he's going to come in and appeal all those in the old ad valorem tax. So now, instead of the one appeal and title tax, you now have 4 others. So I think, and I hope this whole conversation is way more than what I think is going to happen, but I really do believe that the number of motor vehicle appeals is going to increase in this new world. Now, why would the newcomer to Georgia appeal? Newcomer to Georgia comes in and he walks into the tag office and he says, I just moved to your county. And you look at him and you say, I'm so glad you moved to Georgia. And the taxpayer says, well, I know I need to change my title to a Georgia title, and I need to register my vehicle. And you say, you absolutely do. And this fella says, but I also have my wife's car, and I have 2 driving age teenage children who have vehicles. And you then smile in glee and rub your hands and say, I'm 4 times as glad you've moved to Georgia. Because now this fellow, in order to title and register these vehicles in the state of Georgia, has to pay the title ad valorem tax on the value of all those vehicles he's bringing into the state. Welcome to Georgia. Now, we're going to give this fellow a break, and we're going to allow him to pay his title ad valorem tax in 2 installments. He's allowed to pay 50% when he comes, and he has a year to pay the remaining 50%. Okay, that's nice. Now, that sounds nice, except that perhaps I just attracted a large new industry to my county. And part of that is that they brought in some of their upper management to get this business off the ground. So we're talking probably folks who are bringing in vehicles who may well be worth altogether $80,000. If this was a 7% year, we're looking at $5,600 in title tax that he's going to owe. Even at 2 installments, that's probably more money than I have in my pocket right that minute to pay. So we're going to allow them to pay 50% at time of initial registration and the other 50% within 12 months. Now, should this taxpayer file an appeal, we've simplified life, and we're going to go ahead and force the 50% payment, not 85% of 50%. And then whatever adjustment might be made on the appeal would be made before the second installment was due, we would hope. So it would be done that way. But yeah, you may well get an appeal. Yes, ma'am. Sure. Mm-hmm. If they pay 50%, if they come in and they live in Pickens County when they move here, and then they decide they don't like Roy much, and so they're going to move over to Gilmer County, then they still owe the remaining 50% to you because they really owed it all to you when they moved here. We just allowed them to pay in the 2 installments. Linda?
And what if that upper management fell on like 6 months and then moved to another state?
That's a real issue. Now, one of the things Gratis will do if they only pay you 50% is there's going to be a hold put on that title. So the title is being held. However, some other states don't really care, and they'll just issue another title. So there you really have no leverage in that case to get your additional money. But the best we can do is at least put a hold on that title.
So in essence, we can ask them for
Sure, you can ask them.
Tell them that
Yeah. Sure you can. Yes, ma'am.
Someone moving out of the county, they move out of Leeds County, how do we get that distance? Will there be bills sent out to them? And then would they go into whatever county they're in and pay that, or would they have to?
They need to come back to you and pay it. They need to either come back or mail it to you.
Okay, so they would go back into the county they're living in.
Right. No, because not picking on any county, but if County B got the money that belonged to County A, County B might be just inclined to hold on to it and not pay County A. So the taxpayer owes it back to your county, and the way this is set up, if the money belongs to Pickens County, he needs to pay the money in Pickens County. Can they pay online? No. Not this. Not yet.
Gratis will show if it belongs to another county.
Yeah. The other thing is there would be a way that if you wanted to allow this taxpayer to make multiple payments, Gratis will allow you to do that. You don't have to if you don't want to. Taxpayer happened to walk back in a couple of months later and say, look, I just got my income tax refund. I have a little money here. I'd like to pay down some of my balance. Gratis will allow you to accept that payment. Now, if this, and we can get into this more this afternoon, but if the taxpayer's registration period hits, the renewal registration sometime within this 12 months, you're going to allow him to renew. You can't stop the renewal process because he still has time left to pay. But now if he doesn't pay at the end of that 12 months, we're going to suspend the registration. And he's going to get a letter that you can mail him at 10 months that says, hey, Mr. Newcomer, just friendly reminder, you owe us, and if you don't pay, then your registration will be suspended at the end of that 12 months. So that, again, sometimes vehicle registration doesn't mean a darn thing until they get pulled over, right? And there's no like lapse penalty that's in the statute. Let me get this one, I'll come back to you. Yes, ma'am?
I have two questions. One, the second part, are they gonna be sent a bill out?
They'll be sent a letter.
Those similar? Well, then if they haven't paid in the like 2 months, and then is it gonna like create a spreadsheet or something of the ones who have not paid, or are we just gonna have to go in there manually?
It isn't, and it's been a while since we worked on that requirement, but I think it's an on-demand type thing that you can just pull up, and you'll be able to pull out the letters for those at that time. But I can verify that for you. Yes, ma'am.
My question is Gratis gonna initiate this letter?
It will be there for you to do.
Okay, so Gratis, like, the state is not gonna, like, the insurance lapse letter that y'all send out, it's not gonna be like that. It's gonna be our responsibility as a tax commissioner's office to mail these people.
Y'all wanted to collect the money, so y'all get the responsibility. Did I get all your questions, or did you have enough? Okay.
Vicki, is there a penalty if they don't pay?
There is not a penalty if they don't pay on time. Mark?
Where the vehicle's wrecked.
They still owe it.
A lot of those.
They're going to still owe it. And the hole's on the title, so they can't even go through the salvage process till this is paid.
The insurance claim that won't be involved.
They're not going to be happy. Mary?
What happens with folks like here who have a house here, a house in Florida, and we're having a lot of problem with this as it exists now, where they buy the tags in Florida, but they want a homestead here. Is there any kind of connectivity that we can make between a homestead exemption and where you buy your tags, or?
One of the questions on the homestead application is where your vehicle's registered.
But they lie.
Do they? I thought all these other counties said their taxpayers didn't lie.
Well, they buy one here and they buy one in Florida.
There's nothing that you'll be able to pull through the Georgia registration and title system that says I have vehicles registered in another state.
And there's no enforcement to make them, if they homestead here, register their business.
We can't either homestead if they register in another state, we can.
You do better in some counties.
Cobb does it. DeKalb does it. And some others do. You know, as part of their homestead audit, they'll look to see where vehicles are registered. Same token, if the vehicle's registered in another county, somebody's been out there millage rate shopping to try to find a county with a lower millage rate or a county that doesn't require admissions, they'll yank the homestead. So,
Sorry, you probably already answered it, but if someone wants to sort of claim new resident status in order to pay half, what can we require documentation-wise to, because they're both, I mean, bought it out of state, but all was lived in.
right.
But now they're claiming, well, I'm a new resident, it's an out-of-state.
Well, you need to, number one, very possible that you already have a record in Gratis when you key in that customer number, that so you know it's somebody who really does live here. And it's whatever you use now to determine that that person is coming into Georgia and that they're timely filing. So those kind of rules around that, which are very loose business rules, and there's really not anything we can do in Gratis to tighten that down. There's not anything we can do from a programming standpoint. So it's going to be, and I'll give you an example of how this is going to be ugly. Had a young lady that was sent to me through a legislative connection a few weeks ago. And she was unhappy, and actually unhappy with this county we're standing in today, because she got her pre-bill in July. And being the good citizen she is, she had the money, so she went ahead and paid it. She then got a job opportunity to move out of state. So she moved to Alabama. Now, she actually moved out of the state before her birthday. So her whole contact with me was she wanted you to refund her money. And I'm like, there really is no provision for that, but in order to do it, you file a claim through 48.5/380. You know, that's really the only provision. I'm not hopeful you're going to get your money back. But I said, but the rest of the story is, she had to, when she went to Alabama, she did what she was required to do by Alabama law, which is register that vehicle in Alabama and get an Alabama title. Alabama also charged her the ad valorem tax to the end of the year. So she paid Georgia's couple of $100 here in Forsyth County, and then she moved to Alabama, and I think she said she had to pay $70-something to pay the end of the year in Alabama. Now, her renewal time in Alabama is going to be next March or next April. So she's going to renew in Alabama next March and next April. The real kicker is she's going to move back to Georgia next July. Now, because she's coming into Georgia with an out-of-state title, she's going to owe title ad valorem tax. And she's, you know, and that we are a very transient society, so this is going to happen, but because she's coming back in here with an out-of-state title, she's going to be treated as a newcomer to Georgia. And there is no way around that unless she breaks Alabama law and Georgia law, brings that vehicle back to Georgia in February and gets a Georgia title and just stays in Alabama without a current registration in Alabama. I couldn't tell her to do that. Yes, ma'am.
For the vehicles, that type of situation where they're here, they're out of state, moved back in, but the Georgia title.
We would have canceled that Georgia title when Alabama issued a title. We should have canceled that title. If Navitas fed us that an Alabama title was issued, we should have canceled the Georgia title. I don't know that I want to hear that question. You know, Gail?
And it matters not that somebody moving in has just paid their ad valorem or their taxes in another state. No provision for any exception there.
There's also, I can even make that worse. I go out of state and buy a vehicle, and I may be forced to pay sales tax in that state. I come to Georgia, there's no reciprocity agreement like there is in sales tax today for me to get credit for that sales tax I paid against my title taxes due in Georgia. Remember who I said push this bill?
Something may be addressed hopefully subsequently.
I don't know. They're already addressing stuff, and it's really pretty scary. So, these are our welcome to. This is one I think is probably a political nightmare, and we're going to talk a little bit about PR you need to be doing, but I don't care what kind of PR you do, it's going to be hard to reach this taxpayer because they don't care what Georgia does until they go to move here. So we can put it in our taxpayer guide that we have that's out there online, but only probably a few folks would ever think to pick that up and look. I've had a few folks over the years that would call and say, look, I'm relocating from out of state and I want to ask you a few questions about Georgia law as far as property tax and that kind of thing. You'll get that occasionally, but by and large, most people just move where their job tells them to move and they suffer the consequences when they get here. Now, we have the opt-in folks. All right. Gets more fun. They made a provision in this law in order not to hamper motor vehicle sales during 2012 while we were getting this thing geared up and ready to go, so that people who purchase a vehicle in 2012 up through the March 1st date, you gonna sing for me?
Oh, good.
Yeah.
We'll let you pass this time. Crystal doesn't want to play back up. May opt in if they choose. Now, there is a little kicker here. The vehicle has to have been purchased in Georgia. So I spent several days in our road shows over the last few weeks in places where the majority of their sales were coming either from Tennessee or from Alabama. Yesterday, I was where they're coming from Tennessee, North Carolina, and South Carolina, because we were up in the Habersham area. So that vehicle was not purchased in Georgia. They are not allowed to opt in, even if they brought that vehicle into Georgia and paid the sales tax here that they would have owed in Georgia. There's just no provision for that. Yes, ma'am.
I'm going to be falling in the opt-in. I bought my car from a Georgia dealer, but stationed in North Carolina. Like they have a Georgia dealer number, like as far as sales tax number, the whole 9 yards.
But they're going to be marked as an out-of-state dealer in our system. They collected Georgia sales tax.
Yes.
They're a sales tax dealer, but they are not a Georgia dealer.
So I'm just screwed.
I think so. Ma'am?
What about these 2012 folks may not, for whatever reason, not have paid?
The only people that would not have paid the sales tax yet would be a business-to-business or a business-to-individual sale. Otherwise, there's no way they would have bought from a dealer and not paid sales tax.
I'm talking about out of state, I'm sorry,
Oh, okay.
out of state.
Well, they can't opt in, so it doesn't matter.
But I mean, if they bought, well,
They bought it out of state.
it's a House bill that's in here now passes that allows them to do that.
Please don't go there.
But I mean, how will we verify that? Verify that that tax that we're gonna give them credit for to opt in.
Okay, first of all, do you collect out-of-state tax?
I do, yes.
You do?
Sometimes
Okay,
not.
I know they don't. Well, if they didn't pay it to the county, they would have had to pay it through a regional office, so we should be able to track that. Now, guys, most everything I'm telling you today is as the bill was passed last year. We had no option when we started programming gratis but to program it, to dance with the one we had that we took to the dance, because we don't know what's going to happen. We don't know what bits and pieces of what's been proposed may pass. We don't know what the implementation date of some of those, because I promise you, if some of those were signed today, we couldn't implement by March 1st. It's just too much programming involved. So, you know, we'll probably have to come back and do some abbreviated training after they finish doing whatever they're going to do and we get the changes ready. Yes, ma'am?
Are we still going to exactly?
All right, you will continue to collect sales tax on those vehicles from out of state through March 1st. even though they cannot opt in. You will also continue to get sales tax after March 1st on things that come from dealers such as campers and trailers that are those dealer sales from out of state. So you'll still continue to have that sales tax. But after March 1st, if that taxpayer buys a car out of state but comes to you to get a Georgia title, he's not going to pay any additional sales tax. He's going to be subject to the full title tax. So you won't be collecting sales tax from him anymore unless you're a T-SPLOST county, and you may be T-SPLOST. So you would have to collect T-SPLOST if you're collecting that, but he's going to then be subject to 6.5% title ad valorem tax. So you wouldn't collect it through the sales tax standalone module, you're going to collect it as title tax. Well, if he's buying it after March 1st, he is going to have to be in. Everybody's in. He's in. He doesn't have a choice. Yes, ma'am.
Those people that bought vehicles from business, like my husband bought a van from a business, got a letter from the Department of Revenue paying the sales tax. Is that sales tax deductible or accredited for?
All right, first of all, was the business a Georgia business?
Yes.
Okay, business was a Georgia business. Yes, that sales tax he paid, you need to take that letter from us that says how much he paid. All right? So let's say we have a vehicle purchased in Georgia, purchased at a dealer, and the taxpayer wants to opt in. Now, he bought it sometime between January 1st, 12 and March, or the end of the day on February 28, 2013. He can opt in. He needs to bring you the bill of sale. Why do you need the bill of sale? You need to know how much sales tax he paid. You also need to know what kind of trade-in allowance he may have been allowed at the dealer, because you would calculate what he owes in title tax as if he bought that car whatever date he walks in your office to opt in. So you'd have your gratis starting point for the fair market value, less the trade-in. And then he's going to get a credit for whatever sales tax he paid at the dealer, and then any ad valorem tax that taxpayer may have paid on that vehicle, if he had a birthday sometime within that period, would then be a credit. In all likelihood, dealer sales will be able to opt in without paying any additional money. However, you have the casual sale fella who wants to opt in, has no sales tax credit, has no trade-in credit, so all credit he might have would be the ad valorem tax he would have paid. He may owe additional money in order to opt in. One of the things you are going to have to help him do is at least understand what happens if he does and what happens if he doesn't. You know, you have to kind of say, how long do you plan to own the car? Because if I don't plan to own it long, I probably don't want to opt in because it's not worth coming up with the additional money out of my pocket. But if I plan to own it like I own cars, 10 years, then I may well want to opt in, just not have to pay ad valorem tax. Yes, ma'am?
We have a lot of people, or January and February birthday people.
Yeah.
Renew their tax. So they will get credit for the ad valorem they paid if they decide to opt in after March 1st.
Okay, her question was, if you have your renewal is January or February because you have a birthday one of those 2 months, they're still required to pay, but then that is a credit that they will have to apply toward their opt-in.
Now, when can they opt in?
March 1st.
Okay.
If your birthday's in November, you can opt in March.
You can opt in whenever, anytime after March 1st.
All right, this is a bunch of questions for us because we have so many people. Do they get credit for their 2012 ad valorem
Yes,
as well?
2012 and 2013. But 2012, if it was on that same vehicle. Okay, they would have had to have had that vehicle. So chances of them buying it in January or February and also owing ad valorem tax, unless they're dumb like me and did something like that one time, would not be likely. So they probably would have only paid once.
So we might just have a handful
Right.
who get credit for both years.
The other important thing to note here is what is the last day they can opt in.
December 31st.
So if I am a renewal and somehow I don't hear about this year, and I don't hear about it all year, when I come in next year on my birthday to pay, it's too bad, so sad, you are too late.
So
So basically, if they don't opt in by December 31st.
There is no provision to opt in after that. You're done. Put a fork in you, you're done, right? Okay? So the opt-in folks, and that's going to be another one of those drains out of your ad valorem tax, is those folks who would normally be paying ad valorem tax on those new vehicles they bought are going to want to opt in, particularly if they bought at a dealer. There would be no reason if you bought at a dealer you wouldn't want to opt in that I can think of. Because I just can't imagine there would be rare cases that you would not have paid more than the title tax would be. Maybe in Cobb County, because they have a 6% sales tax rate, they might owe a little bit because the rate's 6.5%. But that would be the only reason.
Like where we're at, we border Tennessee, North Carolina, and we have like just across the line, like 25 miles across the line is a North Carolina dealer, Tennessee dealer. And so we have a lot of dealerships where people go there to buy their vehicles. So we're gonna have a lot of angry people,
Yeah.
like myself.
But see, you've got a smile. That's so nice. We're so glad.
Yeah. I mean, because I had my hopes up. I thought, all right, I'm gonna save $200 a year by being able to opt in.
Yeah. Now, I haven't, and Clint and I were talking, Clint Mueller's here from ACCG. He and I were talking on break. I haven't even had a chance to read House Bill 80 to see what all the proposed amendments are, so some of them I'm still not sure of. So
I mean, this could be amended.
could be. Anything can be changed, I promise you.
Will it be done before March 1st?
It can't promise. Because it's got to go, I mean, that whole legislative process, the way the bill went through initially won't happen this time. This time it'll have to go through that whole legislative process, which depending on committee hearings and how quickly and whether or not they're getting along down there may take a few days, it may take several weeks. And then it still has to be signed by the governor at some point. Now, there is an online calculator online, and I'm not going to try to pull it up because every time I've tried to do anything creative during a presentation, it's locked up on me, and I don't want to take your time. We do have an online calculator. If you go to Georgia Department of Revenue, go to our homepage, there'll be a little banner that runs across, and it'll say Title Ad Valorem Tax Calculator. You can click on it if you're an opt-in person and look at what you may be, whether you have enough credit, whether or not. Also allows you to estimate how many years you want to own the car. It'll tell you what the ad valorem, what you would save. There's also another option that if you're thinking about buying a car, that you would know what you would owe. We are in the process, and we also have our frequently asked questions out there. We are in the process currently of translating both we're trying to translate the calculator. We're very close to being through translating the frequently asked questions into Spanish, so that we have some help there for some folks whose maybe command of the English language isn't as good as ours is. Barbara? Yeah, we're actually working on that right now, changing that language a little bit. So, what to expect March 1, 2013? Well, the Revenue Commissioner and I have decided we're going on vacation that week and the next week, and if things don't go well, I may be on a permanent vacation. We may have angry customers because they're uninformed. They're going to, again, feel like we changed the rules without asking them. But quite frankly, guys, they changed the rules and they didn't ask any of us either, did they? You know, they're new to Georgia. They come into Georgia. They're excited about their new job, their new place, and they get hit with that issue of being new to Georgia. Some folks who are used to walking into my office, the motor vehicle headquarters, and taking care of lots of transactions are now going to be turned away. So they're going to be angry. They're going to come in and say, I need this title today. I need it transferred so I can do something. And I'm going to say, I am so proud you have that new vehicle, but you now have to drive yourself to whatever county and process your title work there. We will not be able to do that work at our headquarters anymore. So those taxpayers are going to be, and we're going to do the best we can to let them know that. But if they don't come in, I can't tell them.
I'm sorry, I'm just chock full of questions.
I'm going to name you something, but I haven't figured out what yet.
You have a chair there beside you. You can call her Matt. Yeah. Okay, these out-of-state dealers that I'm talking about that have Georgia sales tax numbers,
will they be able to opt in their people through that Georgia sales tax number, or?
They'll have to collect title ad valorem. As far as opting in, no. But if
Like new sales?
new sales, they'll collect, instead of sales tax, they're now going to collect title ad valorem tax and send it to you if that taxpayer lives in your county.
Okay, so like our people will still be able to be on the title
Sure.
tax? Okay.
Now, if that state charges something, such as South Carolina, I think has a $300 fee that they may charge even an out-of-state resident that you currently are giving credit for in Georgia against sales tax, there's no credit for that coming over to the title tax.
So like Florida, we, normally reciprocate the 4%. So that will not be anymore. Will
Not
they
unless
come in?
they owe 6.5%, even if they paid Florida 4.
Okay.
So we have this group of, yes, ma'am. I'm sorry.
I was going to ask, is that cut out from people going to the state to pay $10 extra to get the title in the same day?
Yes, ma'am.
That's all gone.
Yes, ma'am. I'm closing windows at my place. Y'all just get more. Y'all open more. Yes, ma'am.
That was my question.
Okay. No, I mean, if it was a replacement title or a corrected title, we could do it at Tradeport or South Meadow. But if they want to just they need that title to walk out the door with, and it's a transfer, they cannot come to me and do it. The money has to go through you guys, not through us. I can't collect your money for you. Okay? I think you're going to see an increase in appeals. I can absolutely guarantee you that transactions at your windows are going to take longer than they do now. Because you have to explain all this to a taxpayer. And you have an opt-in person, and you have to go through that process. And you have the casual self-felon. You've got to explain all of that. So I think without any shadow of a doubt that the transaction time at the county agent windows is going to increase. One county did some role play, and they came up between 6 and 8 minutes per transaction longer. And that's if, I think, you don't have an unhappy person. That would just be kind of a normal transaction. Do you need increased security in your office? You're going to have some angry folks who may need a little bit of encouragement to calm down. The other thing you're going to have, I feel sure, is more cash in the office because you're collecting larger amounts. So that's just there. I'm not saying that you do need it. I just think it's something you need to think about, particularly if you're in kind of an office away from the rest of the world. At least a button to press. Now, let's educate and inform our customers, because Lord knows other people are doing it for us. Clint.
Beginning March 1, will the Department of Revenue have a hotline number so these counties can have questions?
Well, we do plan to increase the number of folks on the county help desk. I'm not promising you're not going to have to wait to get an answer, but we will definitely have more help on the county help desk. But we also have to have more help on the citizens help desk. So we as part of House Bill 386, we were given some money to be able to bring in some folks to help us through this transition. So that is part of what we'll do is we're bringing in some, we already have them there, trying to get them trained and ready. Also, because I can close windows, because I won't be able to do as many transactions anymore, we'll have that staff that we can use on some of those other places. Guys, there's a ton of misinformation out there. I can opt in for $300. Y'all gonna let me opt in for $300? I bought my car in 2010. Now, when people hear that, they just think anybody can opt in. If you'll let me, Linda, can I come opt in? Because I'm tired of paying. No, Linda tells me I can't do that. So there's all kinds of misinformation. The birthday tax has gone away. So you're going to send this guy a notice, his pre-bill, and he's going to come into your office and say, I don't owe this. They told me my birthday tax went away. What you going to tell him? I'm very sorry. Guys, you gotta dust off your customer service skills to be the very best you've ever been. Barbara? They owe it too. Yeah, you're going to make them double happy. Her question was, they may come in to either opt in or pay TAVT, and they owe prior year. They still owe prior year. That didn't go away. Sort of like the fellow whose birthday might be in June, and he may pay his ad valorem tax. Just not thinking. And he finds out in September, October, and November he can opt in. Now he's already paid it and you already have it. He can still opt in, right? You going to refund that money he paid in June? I bet you there's not one of you in the room that would refund it. Now, how can you reach folks? Inserts in your tax bills. You're not going to be sending out a lot of tax bills before this thing is almost winding down, right? At least the opt-in part. How about water bills? Do some of you have a good relationship with the water folks? Press releases. They are promising me a press release. I don't have it yet because everybody needs to bless it. Once we get it, once we release it, we'll share it with you. You can go to your local paper. If they don't pick it up through one of the wire services, then maybe you can convince them to print it for you, and maybe they'll come talk to you and you can give your side of the story, which is the right side, because you've now been to school and you understand it. Clint?
We already have a press release available on the ACCG website for anybody wants to use that.
Okay. Clint's saying they have a press release on the ACCG website. For those of you who haven't seen it, Gail Downing did an interview with the Marietta Daily Journal, and there's also a YouTube out there. I've sent everybody to her YouTube.
And Gwinnett did that. I actually borrowed it.
Ah.
With permission.
Okay, Gwinnett did one, and I also think David Curry in Henry County has done one.
Is DOI going to do any radio public service announcements?
We are. Well, we have one, but we don't have very good coverage on it yet. All right, some of the things we are doing, we've had our monthly newsletters to you so that you know that we haven't just been sitting there twiddling our thumbs. We've been right busy. We have the website, we have the FAQs, we've met with a lot of the stakeholders. We've tried to reach out to dealers. We are going to be putting out a dealer guide. For those of you who deal with a lot of out-of-state dealers, I don't have access to those dealers, but you know who they are. Share this dealer guide so they're aware of what's going to happen. We've dealt with the salvage leasing companies, rental car. We've even tried to keep the legislature up to date, or at least the leadership, on things we found that are maybe a little bit problematic in this bill, and for things we think that maybe those PR nightmares, like the Welcome to Georgia kind of thing, and the opt-in where folks are going to think they can opt in. So we've tried to just sort of make folks aware of the things that we found as we were working through the bill. Now we're in the middle of the statewide training. This is the 6th of about 14 sessions I think we'll be doing. I am going to come back before, and it'll come up this afternoon, probably after the 1st of March, and have some additional work sessions with tax commissioners and their payout folks, the folks who actually do the monthly distributions, to just sit down and look at the reports and walk through that process. I'm going to limit that attendance to just those folks who are actually involved in that process. We won't do those till after the 1st of March because there just aren't enough hours in the day to do that until then. We are doing some press releases. I urge you to talk to your local paper. You know it better than anybody else in your county right now. So you be the one to tell the story and not these other folks. We are working on an infomercial, but it's with public broadcasting, so I'm not sure that it'll get great coverage, but that's who we're doing. Do you want to do a brochure? I don't know. So with that, it is a little past time I told you I'd let you out for lunch, but I'll take any questions. For the afternoon session, I'm going to probably suggest that if you're county schools, county government, you may not want to see the inner workings of Gratis, and that's really what we're going to be doing this afternoon after lunch. I plan to start back at 1 o'clock. Can y'all do lunch in an hour and 5 minutes? Yes, ma'am. I got a question, so don't.
Do you know when the dealer guide will be available?
It's kind of like that press release. They're working on it.
Will it be available on
Online.
the county online?
It'll be just available online. We can email it out. 1 o'clock?